The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 20th Washout Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I do everything we can to have an extraordinary Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at what the bulls and the bears, the buyers and the sellers are doing out there. I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in at any time, 877-927-6648. Internationally, 727-445-1044. Would love to hear from you. We'll put 4 eyes on your chart, whatever it is that you're looking at. I'll do everything I can to answer your question. Well, let's get this show kicked off on this wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 462. She's trading at 15,555. The S&P down 54 points at 1827. NASDAQ Composite off 113, trading at 4363. Russell down 24 points, trading at 970. Gold's up a whopping 16 buckaroonies at 11.05, trading right into its TAS market profile high on the weekly basis. Silver's up 2 pennies, so silver's not doing a whole lot. Light sweet crude back 2 buckaroonies off trading out at 26.40. To the upside, what do we have? An individual stock? What do we do? No, we don't. Oh, I'm going to need to reset this. I see. Okay, so we won't talk about the individual stocks. We'll do that during the next segment when I can reboot the eSignal software. Okay, let's look at this. We got to look at the markets here from a couple different perspectives, several different perspectives out there. Bottom, let's take a look at couple short-term charts. Then we're going to go to long-term charts and really get a feel for where the market is going to. The short-term basis between the NASDAQ, the Dow, and the ES Mini, they all show the same pattern out here. That pattern is where price moves lower, does with less relative weakness. Now, that alone is not a bullish signal. That's not a bottoming signal. They can be false starts out here. We don't want to see any more false starts. In this case here, we did get a nice little bullish engulfing candle as we were coming into the show at 1 o'clock. Now, what the market needs to do, if this is any kind of short-term bottom, intermediate term bottom, any kind of bottom whatsoever, you've got to get follow through. Now, follow through on the 30-minute chart for the NQ. You can see that price ran right into its resistance zone. Used to be support. That was the TAS market profile. Now, this is really interesting here. This is a slight little nuance. And I wonder how I can do this. Let me do this on a different chart out here. I'm going to try to do that. We're going to look at a 30-minute chart here for the NQ. I think this is important. This may be an important signal. So give me a moment. We'll put up the signal, the symbol out here. So we've got NQH6, and we're going to go ahead and put this on a 30-minute time frame. And it was the, whoops, not 303-minute, although we could do that. I don't know what results we'll get. But what I wanted to look at were our TAS market profiles. So let me add that to this screen out here. Multiple time frames, there we go. And I've got to just change a couple things out here as soon as this populates. And we're going to take a look at the bottom of the 30-minute boxes out here. So I'm just turning everything off except for it, because what I just noticed, just as we were looking at that screen out here, is there we go. Okay, so we've got everything that really I want to take a look at. Now, the red dashed line that you're looking at on my screen out here, well, it's not dashed anymore. The red lines that you're looking at on my screen out here, these are the bottoms of the TAS market profile boxes. Now, when when markets are bearish, what you're going to see is these bottoms continue to form at lower levels. So once we saw a close below a lower level out here, the first one was yesterday at about 9 o'clock in the morning. The market has really cascaded since that period of time. But this new market profile that began here at 9:30, notice how it's just slightly above the previous box out there. That has, even though the market moved to lower lows without any kind of new profile showing up, if price can get above this low out here, 4044.40, that may be a signal. At this stage here, what you and I know is that's still resistance, but that is something interesting for us to keep an eye on out here. If we take a look at what's going on inside the ES Mini, let's go see what it's doing. It was only the NQ, I believe, that showed up like that. Here's the ES Mini. You can see the same kind of pattern with regard to markets pushing lower, doing it with less relative weakness out here, and a bullish reversal signal. You need to get follow through. But unlike the NQ, which has its TAS market profile at the bottom of the box just slightly above where we're trading, the ES Mini not so fast. 1836 is the number that it needs to get up and close above. So probably the NQ is what we'll want to watch here during the next 45 minutes for any kind of signals, bullish, bearish, or otherwise. Inside the Dow on its 30-minute chart out here, again, price moving lower, doing it with less relative weakness. Very close to a bullish engulfing candle at that 1 p.m. session. It also needs to get up into that 15,600 area if there's going to be any kind of change in trend. Okay, so that's what's going on the 30-minute charts out there, just to get a feel. Let's assume at this stage of the game here that the market doesn't get above those levels. Then let's look to, hey, where's the market trading to? What are the levels to be paying attention to? And I think the easiest way for us to do that is to go take a look at multiple different time frames out here. Let's go ahead and start with the Dow. And this is the weekly chart on the right-hand panel, the daily chart on the left-hand panel. I'll probably switch back and forth between, not I probably will, I'm going to switch back and forth between these two charts, and we'll take a look at different time frames. Let's first start by taking a look at this is the weekly time frame, and on this weekly time frame, we have both monthly and weekly horizontal trading range. But since they seem to be so close to each other, let's go ahead and turn one of those off, just simply to clear up our readings inside this chart out here. So let's go ahead. We'll turn off the weeklies. So what we can see here, and these areas act as trading ranges that price travels between. And so we're taking a look at the monthly right now, and we know that the monthly and the weekly are very similar. If, in fact, you'd have to say that if, in fact, the Dow takes out, it could be a triple bottom out here, a triple Lindy. That's the February 3rd low. Probably ought to put a data box up here. It might make it easier if I gave you some numbers to follow. So inside of the Dow, you're looking at a price point of 15,340. If it fails to hold that level, let's go ahead and put up these. There we go. These midpoint labels. Then price is likely to head down to the 14,582. And if it fails to hold that area inside the Dow, you're likely to see a price move down to 13,180. Those are the numbers we're paying attention to in the Dow. When we get back from this breakout here, let's go take a look at the daily chart, or maybe let's go take a look and see if we can find some confluence zones, some other levels to be watching inside of the Dow. Right now, we got the Dow trading off 462, S&P down 54. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 511 right now. S&P is down 60. Question that came in, what's the market doing and why? Well, the why part of the market, let's just take a look at what the market is doing. And, you know, what the market is doing is what it has done on average for the last 84 years, which is that it heads lower into the month of January. So this is the data here that, you know, that summarizes that price movement out here. So typically, you look towards the end of January, early part of February as where the market makes a bottom. So it's following along that, the depth of which that this is not really used to help you identify the depth of a move, but it is to help you understand the market's doing what it typically does. Of course, we have a pre-election year out here. We've taken a look at this before. If we take a look at going back to 1932, we only have 21 election cycles to take a look at. Not a great sample size, but not a bad sample size. And the market does one of two things, interestingly enough, during a election year cycle out here, and that is it either from the get-go heads south or heads north. Now, out of those 21 election year cycles, 7 of them have been down moves right out of the blocks out here, and that's what we've seen. That says if the market's going to go ahead and follow along, you can see there's a little cluster right here, which equates to about, let me look, I've got to look at over on this chart here. It equates to January 27th. So right here, this date right there, this bottom, January 27th, says if the market's going to follow the other 7 election cycles to the downside, says the market is going to bounce up into the February 3rd. So a very short bounce, and then the market continues lower into the March timeframe. If you want an exact date, I wouldn't use it as an exact date, but March 9th would be it. And that's where you could get a what looks like a fairly healthy bounce in a consolidation area. But here's what you want to be paying attention to. What does the market basically do? Now, I don't know what the date of the election is out here, but I can tell you that in 2016, it says the market would move down to November 22nd. That would be the day of this bottom out here. So what's the market doing? At this stage of the game, we can say it's following along with the election year cycle where it moves to the downside, which looks a little different if I go ahead and compact this into all 21 patterns. I'm not really interested in compacting in all 21. I'm more interested in understanding, do we get out of the gates going south or north? In this case here, it's to the south, and this is the pattern that is unfolding out here. Let's go back and take a look at what's going on. I mentioned let's look maybe for some confluence zones and retracement levels inside the S&P 500. Here is a daily chart. Let's actually put this on a monthly time frame here, and you can probably get a better feel. I can explain better what it is that we're looking at. Okay, so we know that the Dow is up against an important level of support, right? And we're talking about the lows from February, which where price stopped in August, and we'll see if price is going to stop here in January. If it doesn't, if we take a look at the bottom in March of 2009 from the low at 64.69 up to the high at 18,135 here in May, we can also see, well, let me do this. Let me turn it off, and you'll be able to see it a little bit easier. Let's go ahead and turn that off, turn that off. Turn that off, maybe. Yeah, turn that. There we go. And so there's our 15,340. Let's even turn that out. That, in essence, becomes our double, maybe triple Lindy bottom out here. But if, in fact, price fails to hold there, then just your dead cat bounce, your normal retracement level gets you back to 13,812. Now, interestingly enough, the actual high in 2007 was 14,198. So 13,812, 14,198, that becomes a target range out here. If we look at just simply the break of a consolidation, which we can say that that's really what this pattern has been out here, the break of the consolidation, that takes you down into a level of, takes us into a level of about 12,288. These become the price targets out here. If we look for retracement levels, a secondary retracement level to give us that confluence area, you'd really want to come off the swing point from October of 2011. Notice how the 0.618, notice how price right now is really moving into the 0.382 retracement level of that, 15,315. So again, it's another really nice way for us to be able to understand where levels of support or potential support are, and if they fail, where price is going to head to. So this would give us a range of 13,440 to 13,812 to that high back in 2007, which is 14,198. Those become the ranges if, in fact, these lows fail out here. I don't know whether they will or they won't, but that is what you want to pay attention to. That is inside the Dow. Let's go take a look at the S&P 500. Let's go see what it is doing out here. So on the S&P 500, let's take a look at its horizontal trading ranges out here. While that gets published, here is the monthly numbers. Let me just go ahead and put the weeklies on just in case those are substantially different. They're good enough here. Let me go ahead and explode the screen up. And I say explode in a kind, gesturally way out here. But we can see inside of the S&P, you've got this a weekly chart we're looking at. You got this nice little hammer candle down here that formed back in October of 2014. So that low is important, which is 820.66. So far, we've gotten down to 1812.29. So that low has been tested. That's the hammer. You know the expression, if you close below the hammer candle, if you're long, you are wrong. Of course, there's another hammer candle that shows up out here February 3rd down at the 1737 area. You do have potential support at about 1784 out here. That happens to be the weekly horizontal trading range, so that's an area to be watching. So those are some numbers to pay attention to. Let's go back over here and take a look at, we'll go ahead and keep that monthly chart up. It's a little bit cleaner. We don't have to take a look at those horizontal trading ranges. Let's look at the monthly charts out here. Let's see what they show. They show really similar pattern, right, with regard to the consolidation that's out here. If you close below that 1814 area, that's going to give you a price projection of about 1479. Let's go ahead and turn those rectangles off. What else is at the 1479 level? Well, at 1479, that happens to be a 0.618 retracement, which looks like that's what it is. Let me see here. Let me turn that to green. Turn that. There we go. Now that looks a little better. So that is the 0.618 retracement level off of the October low, from October of 2011 up to the high out here in May of 2015. So that becomes the target area. So you can see the S&P 500 as we speak right now. The Dow is really up by an important level of support out here, and if it fails there, price is going to head basically back like we talked about last week. That 1576 to 1479 type area. That happens to be the 2007 top to a zone of confluence inside the S&P 500. Let's go take a look at some of the other indices out here. What do you want to look at next? Let's go take a look at the dog. Let's go take a look at the Russell 2000. Let's go try to figure out what it is doing. We'll look for some horizontal trading ranges there, as well as some areas of confluence. Now, inside the Russell 2000, we can see that price is headed up against this 952 area. That would be its next horizontal trading range level that if it breaks, as price heads down to about 833 out here. Let's go take a look at retracement levels inside the Russell, see what we're looking at there. So if you wrote that number down, the key area to be watching inside the Russell numbers here again, 952. If 952 breaks, that says 893 is next up, or 833 inside the Russell 2000. And this shows us about 856 to 866 on the other chart we're looking at. See Rhodes with TFNN. Dow is off 490. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Dow's off 467. S&P is off 54. Let's go out to California and speak with Paul. Paul, thanks for calling. Thanks for holding. How you doing this afternoon? Let's see. This afternoon. No, it's still this morning for you. Paul, do we have Paul?
Hello. Are you there?
Yeah. What part of California are you from?
I'm from Fremont, California. Can you hear me?
I can hear you just fine. Yes, absolutely.
Okay. Awesome.
You want to take a look? Gosh, that's okay. You want to take a look at FAZ, F-A-Z. Are you in the trade, looking to get in? Tell me what you're doing.
No, actually, I've been in the trade for a little while now. I started buying FAZ at about $42 there, so it's been pretty good. My question to you is this. I'm looking at a longer-term chart, and I'm pretty confused about how this is working out because if I look on a monthly chart going back to 2009 timeframe when FAZ first, I guess, came out, it was saying that it had a value of $100,000 per share. Am I reading that completely wrong? Or
92,400 to be specific. You didn't buy any back then, did you?
No, but is this thing like reverse split? How did it get to that price? I don't imagine there being a bid at $92,000 per share, but maybe I'm completely wrong.
FAZ is the new Berkshire Hathaway. I'm just kidding. Yeah, you hit the nail on the head. Reverse splits up the wazoo out there, and that's really what these triple ETFs do. So you can't really come back. Remember, if you're trading the FAZ, folks, that's the direction daily financial bear. The long-term charts aren't really going to do you a whole lot of good. In fact, really, the short-term charts, for the most part, aren't going to do you a lot of good out there. What you want to do is you want to really understand maybe the underlying instrument that it's trading off of and make sure that you're keeping an eye on that. Now, what we typically use here at TFNN is maybe the XLF, but I think FAZ, correct me if I'm wrong, if you know, I think that is based on the financials inside the Russell 2000, or do you know by any chance?
Yeah,
Paul?
The 2000 or the
1000 maybe.
Right, I believe it's the 1000.
Yeah, but what's easy to pull up is the XLF, which is the sector within inside the S&P 500, and I think that's close enough. So first, congratulations on the trade. In at the 40s levels, you're at 60.53, so that's a good thing. So what is it that you're thinking of doing here, or how can I, was your only question with regard to the monthly and when you were looking at that chart, trying to explain that, or?
Yeah, basically, there's a gentleman that I know who's an older guy, and he's been telling me for years, you got to put your money in FAZ because it's going to go to $30,000 a share and all this type of stuff. And I've been following the whole potential crash in the market here, so I decided to take a shot with FAZ. I never thought that it could possibly get up that high, but when I started doing more research, I was like, something's not right here. This has to be reverse split. I just wanted to get a professional's opinion on what you thought.
I'll take that bet as often as I can get that it will never get to 30,000. Ask him to give me a call and let's see what kind of action we can get there. So you're in a good trade. You've been in a good trade. Let's take a look at the XLF though, just to see what the XLF is doing out here, and maybe something for you to focus on and pay attention to. If we take a look at the high inside the XLF, which I think is number 2 or 3 weighting inside the S&P 500, and the high that I'm referring to goes back to November 6th. Off of that high right now, we are in what I like to call it 7th wave to the downside. Oftentimes, not always, but oftentimes the markets will make a significant reversal in extension when it gets to that 7th wave. So you're in it right now, or you're potentially in it right now. If the XLF continues to make lower lows and it says trading inside or staying inside FAZ, makes a lot of sense. If, for example, tomorrow, for whatever reason, you've got a higher low, doesn't take out today's low, it just really suggests that you maybe take a look at your stops. But, I mean, look, if you've got into this trade because you believe it's going to 30,000, God bless you. It's just not going to happen.
No, I never believed that for a second. But, I have been following this, and I know that we were due for a downturn. I listen to you guys all the time, so yeah. I was well aware that, things were about to downturn. So, but I'm thinking about exiting the trade here probably today, to be honest with you, and then just wait and see what happens from there on out. There's been some good profits, so nothing wrong with taking those.
There is never, and that's what this whole business is all about, is taking profits, right? So it's taking profits and then looking for the next trade setup. Plus, you can always get back into the trade. So you're really not gonna ever hear me tell you to not take profits.
Hey, thank you for your time, Steve. Have a great day, buddy.
You bet. That was Paul in California, and congrats to him trading FAZ out there. And again, it's always important to take a look at what the underlying instrument is. And interestingly enough, you've got the XLF in that seventh wave move to the downside out there. Had a request to take a look at Henry Schein, I believe. But what is that ticker symbol? SH, what is it? SH what? I don't remember off the top of my head out here. Maybe Peak D, maybe I'll type it. Oh, HSIC. Okay, thank you. HSIC. Now, this is trading out at about 143 right now. This is a daily chart that we're taking a look at. And let's see what we have out here. So today, Henry Schein is trading down back into a swing point from a couple days ago. That was on the trading session of January 15th. The volume down there is 846,000 shares. That low is 142.64. It's only gotten down to 142.72, so it hasn't been tested. Volume today is much lighter to the downside. Price is trading below its TAS market profile low on the weekly basis, so that's not necessarily a good thing. If we look at retracements here, just from its prior swing point, which would be September 28th, to a high out here back on December 30th, no reason that Henry Schein can't get down to the 140.32. And the question is, what's with yesterday's candle? I have no idea. It is what it is. Looks like either we've got bad tick data, which I don't know because I haven't looked at this chart, or it traded as much as 160.106 and sold off. I really don't know the answer to that, Peak D, so you'd really have to investigate it. That is on Henry Schein. What we do know is the body of the candle is the essence of price. And so that being said, we know that it's trading down below its weekly profile low. And if it doesn't close above 144.47, says 140.32 would be the next stop to the downside. Gold here up by $17.70, 1106. We mentioned that was trading above its weekly market profile. Yesterday, I mentioned the kerfluffle. No, what did we called it? Yesterday was a, what was it? Baffled? No, I can't remember the word that we used out there. Befuddled. I think it was befuddled. And I said gold had me befuddled out here. Now, I could become less befuddled if, in fact, gold were to close above its weekly profile high. That would be closed above all kinds of resistance. That price point today is 1104.10. What you really want to see it do is take out the swing point from January 8th, and that high is 1113.10. That could set up an A to B equals CD to the upside inside of Goldilocks. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. As we come back right now on my screen out here, we went back to that 30-minute chart here for the NASDAQ futures contract. We can see that during that, as we went into the that first half, that second half hour, the half hour from 1 to 1:30, right from 12:30 to 1, you got a nice bullish engulfing candle. Very next candle session, you got nothing. A high wave candle at best out here doesn't mean anything. We now see that price here during this 30-minute session that ends at 2 p.m. Is trading into its TAS market profile. That says the level that you want to be watching is 4090.75 out there. So again, that little nuance that we took a look at where we saw a new TAS market profile low above the prior low out there is a suggestion, Joey's suggestion to me that, hey, there's a change in trend that may be underway. Now, how long that change in trend is going to last, that I don't know. And we just have to take a look at how are these different patterns showing up on different time frame charts. 10-minute to 30, 30 to 60, 60, 120, 120 to 40, and so forth. Finally, when you get up to the daily chart. Because if we take a look at the daily chart here as an example for the NQ, so, again, the key level to be watching here inside the NQ, and this box is basically fairly balanced. You can't really say the point of control, that blue dashed line, is that much closer to the bottom or the top of the box out here. So we can't determine who has got the upper hand out here at this stage here with the trend that we've been in. You got to say it's the bears, the sellers that have the upper hand. 4090.75 is the number to be watching. Again, if you take a look at the daily chart out here, you're not going to see any bullish reversal signal as of yet. All that we can see is that we're in that 100% move of a move type range out here. Last time we had any kind of bullish signals down here was back on the trading day of August 26th. That set up that nice little morning star candle session. So price can certainly move lower. You're only in wave number 6 to the downside, but it all depends on how this candle session here closes. If in fact the NQ were to close up around 40, the high of today, which is I'd tell you what it is if I could. 41.56. You need to get a hammer candle out there for sure. That would be strong along these other bottom reversal areas here when we take a look at the daily chart. So, by 4 o'clock, well, by 5:15 is when we will know what the daily chart for the NQ looks like. If we go up into a 2-hour chart, just as an example out here, you are getting, I do have a 7th wave count to the downside. That starts back here at about 4 o'clock in the morning. That was on January the 13th. 14th, and we can see that that box here shows resistance at about 40.84 as well. Was it the other one 48? No, 40.90 inside the 30-minute chart. So 40.84 to 40.90 will be a real telling signal. Now, this 120-minute time frame chart here ends also at 2 o'clock as we go off the air. Now, you can see that not only on the 2-hour chart is this a bullish engulfing candle, it's also a key reversal session out here. What's that mean? That means that we have seen the, in order to have a key reversal session, not an outside day, two different things, two totally different things. And I hear people misuse this all the time. In order to have a key reversal session, number one, the market has got to be in an extended condition. Hey, there's nobody out there that's not going to say we're not in an extended condition. Number two, you've got to exceed, the candle has to exceed the high and low of the previous bar. Everybody gets that right. Okay, so that's an easy one. And then number three, you got to close in one tick or 1 penny, depending on what type of instrument it is that you are using, in the opposite direction of the trend that you've come from. And everybody gets that one right. What people tend to forget, what they always forget when they call them key reversal bars, is they forget to look to see if we really were in extended condition out there. Key reversal bars, more important than an outside day. And that's just my opinion. That's because I've gone back and done the work to confirm that. Now, so have we seen any other type of key reversal sessions at all that have failed inside of the NQ on the 2-hour chart? Yeah, there was one right down here at about 12 noon. That was back on January 14th. And there was a shooting star. I've got a question that says, Steve, is oil making a short-term bottom? Man, what an excellent question out there. Is oil making a short-term bottom? How are we going to go figure that out? If we take a look at oil, it's trading at 26.37. It gets down below levels where I thought that this thing would hold as support. The only way that we can identify whether or not oil is making any type of short-term bottom is go down to some real intraday charts out here. Let me turn a couple of things off. Why? What would we be looking for to try to help us make that determination out here? Well, one of the things that we would be looking for would be some kind of pattern. Any kind of pattern out here to help us understand that. And this is a 10-minute chart here for light sweet crude. You know, you could take a look at trends or channels out here. Here's a channel line potentially inside of light sweet crude. Probably about right there, maybe, you know, so I don't know. Price moving sideways has never really floated my skirt. I don't know about yours, but that's not how I like to see a trend broken out here. Do we have any kind of reversal signals? The answer there is no, we don't. Do we have an A to B equals CD to the upside? No, we don't. I don't see anything here that would help us to determine whether or not light sweet crude has formed any kind of bottom, and that's on an ultra short-term chart out here. That is on a 10-minute chart. When a bottom forms, you're going to see A to B equals CD patterns. You know, you're going to have the market go up, pull back, go up, pull back, go up, pull back, and that's what you would likely see inside of the market. So we've seen a staged comeback at this stage here, a bounce that is underway. Of course, when we began the show, you and I knew, just you and I, let's keep this a secret here, you know? Let's not tell anybody else that you and I know some of the secrets of what the market is doing by just understanding, you know, is it moving higher, is it moving lower, is it doing with less strength, less weakness out here? In this case here, certainly doing it with less weakness than the bullish reversal signal. So that's what's going on. How long will it last? This, I absolutely do not know. Let's take a look at what else do we want to look at out here? There's so much that we can look at. Let's take a look at the VIX index. Let's go see what she is doing out here. If we take a look at the VIX index, this is the one that is the one that gives the most offer of larger than just a bounce, you know. But you've heard me talk about this, and you're probably saying, your guy doesn't know squat out there. But when I take a look at where the cash VIX is trading at, this is the squat that I do know. It's trading at 28.72, and next September, this September's VIX contract, 23.85. This August, 2370. This July, 2375. The June, 2370. 2390 in May out there. I mean, this thing is so out of kilter here that at some point in time it's going to be an explosive. It's got to get back in alignment. It just has to get back in alignment out there. It just needs a few cracks this way or that way, and then it gets back in alignment. Are we there? And then if, let's just say today we're it. I'm not saying that it is, but if today were it, what you would see is you'd see the VIX index move all the way back to about $22.80. You're at $28.80 right now, so that'd be about a $6 move to the downside. It gets below $22.80, and you're looking at $19.04. Below that, $15.28 inside the VIX. But things are out of whack. But that doesn't mean that they can't continue to get more out of whack here. Steve Rhodes with TFNN. Dow's off 374. S&P's down 38. Gold's up 15. Silver is just flat. Hi-ho silver, but nobody wants to buy it. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
market back up, folks. Dow's off 360. S&P's down about 50 points. This happens to be a daily chart for the NASDAQ composite. If the market were ending right here, right now at 1:54 p.m., we would know that there was a hammer candle that had formed today in a seventh wave move to the downside. We know that the high that was made inside of the NASDAQ composite, that took place out here at a seventh wave move to the upside on December the 2nd. That happened to be a bearish engulfing candle as well. So you've got a hammer candle as of 1:54 in the afternoon inside a seventh wave. That's what's going on inside the NASDAQ composite. Inside of the SOX index out here, guess what you've got? You've got a hammer candle as well. As we speak right now, I don't know how the day is going to end, but you can see how prices have pushed off of those lows. The price is trading above where it had gapped down at the open. You've got a hammer candle only in wave number 6 out here inside of the semiconductor index. If we go take a look at what's going on inside the Dow Jones transports out here, look what we've got. We've got a hammer candle as we speak right now at 1:55 p.m. It's blown through that seventh wave out there, but that is what's going on inside of the Dow Jones transportations out here. If we go take a look at the VIX index, well, guess what? Take a look at this. The VIX index, we've got a shooting star. That is also in wave number 7. Wave number 7 to the upside. That's really starting off of this low back here. This is on the trading session of where did this start? That started at October 28th. That is where that count is coming from. You know, I do wish that the market would close right here, right now. Not that only because, well, yeah, I do. Why not? Let's take what we know. Let's take what we've got. Now, here's an interesting chart out here. I know you guys are going to want me to go on for hours, but take a look at this. This is the XAU. Now, the XAU actually also has a hammer candle that has formed here today. Now, we're only in the 6th wave here to the downside, but the XAU is showing some life out there. Somebody get the paddles out. Let's go ahead and apply them to the rest of the market out here. If we take a look at the NDX 100, you're going to see the same kind of setup out here where you don't have a 6th wave or 7th wave. You've got a 6th wave down here, and you've got a hammer candle as we speak right now. The bears are really happy that the market is not closing right now. And how about this? Pulling up the rear end, that is the Russell 2000. You're right, Mike K. They are everywhere out here. You've got the Russell 2000. Again, these candle formations, they help us understand where the bulls and the bears are, but these are end-of-day signals. They are not signals at 157, but it does at least assist you to understand what is going on. I'm just scanning elsewhere to see what the heck is going on. Of course, here's that chart here for light sweet crude. The question, is light sweet crude going to form a bottom? I don't know. What I do know is this also happens to be in a 7th wave move to the downside, but you can throw this wave out here because this is the North Shore. These are waves, when you take a look at light sweet crude, they are not for the, whoops, now I don't know what the heck I did there, but these types of waves are not the type that you really want to be riding out there. That was light sweet crude. What else do I have that I can take a look at? Hammer-wise, the XLV, that's got a hammer. That looks like this out here, the XLV. As we speak right now, it's trading above its TAS market profile low, so that's not too shabby out here. So for all the bottom fishermen, watch to see how the market closes today. Those candles could easily go way out here. But look, let's not forget the longer-term trend is in place. And we took a look at that as we were coming, well, at one of the segments out here. We'll put this back up on the screen for you. And this is most likely what you and I are looking at. It says we're going to have, some nice bounces along the way. But the market is headed down through November 22nd. You can write that on a pad of paper. You can take that to the bank. You won't be able to cash it in unless you trade it out there. But, folks, stay tuned because somebody that you can cash in on, that's our man David White. Hey, he's going to have an excellent workshop coming up. So stay tuned. David will be up next, and I'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.